Hey everybody, good morning. It's Pete. Welcome to Stock Trading Pro. Today we got a lot to talk about. We're going to talk about Fed Chair Jerome Powell and the basic conversation that he had yesterday and whether or not he actually saved the stock market crash or did he just talk about stuff that we all knew anyway. I think that it was widely accepted that once the Russia-Ukraine crisis started, they were not going to raise it by 50 basis points. Made the announcement yesterday, and quite a few stocks held the bid yesterday, meaning that none of them pulled back. And matter of fact, quite a few of them, financial stocks, which if you watched yesterday's live stream, we were very clear that they were showing a different tape. And I'll point out again, if you happen to miss yesterday's live stream, exactly what that means. I'm also going to show you a book because a lot of people ask questions about two things we're going to cover today, actually in a big way, maybe three. We're going to talk about Jerome Powell and whether or not what he said rescued the stock market crash or whether or not it was old news and it really doesn't matter. It was just a reason to get out of some ideas yesterday and you got good prices. We're going to do a little bit of sector rotation. We're going to walk you through the list of stocks and how sector rotation changed yesterday in a pretty dramatic way. And is this a short selling opportunity, thinking that stocks are going to go further down because what Powell said didn't matter? Or is it the start of a new move to the upside and everything is fine now because they're going to step in and everything is what they call priced in? That's going to be a big part of the conversation as well. So we have a lot to cover. Two of the strongest sectors that we just looked at, some of those stocks are actually just starting to turn to the upside. Other ones have already been there. So we're going to walk through today is exactly the process that I have for finding stocks to buy and then how I go through the process both at night and in the morning. Got some really good questions on a recent coaching call of what's my actual process from start to finish. So I'm going to give you the outline of that process from when I start doing my game plan, how I update my game plan, which stocks I plan to buy, and then what I do first thing in the morning when I get my coffee going. So we have a lot to cover today. It's going to be very actionable today. So stick around. I'll be back in just 1 second. Okay, so thank you so much for joining me today. I really appreciate it. Obviously, everything we discuss here is for educational purposes. Up to you to make that final decision, but I really want to help you make better decisions. I just want to make sure that I say good morning to a couple of people today. Michael Stefanelli, Bootcamp alumni, thank you so much for being in there with us. Pam Hicks, always a pleasure to see you. Ed Ross, thank you so much. Okay. All right. So I want to start out with this book. Obviously, the big conversation that we're having right now is around this and the conversation around what happened yesterday. If you didn't happen to see the news and what happened, it was all about 50 basis points versus what they plan to do in 2 weeks, and a quarter of a point is what they came out with. So if you didn't happen to be involved in the markets yesterday, this is actually the way the market reacted during the day. And actually, I want to give you this right here. This is probably a better example of it. And if I really bring it out here, this kind of reaction is what the market gave us yesterday. And it was amazing, quite honestly. And not unexpected. That's what I want to get across here. If you're a regular viewer of our channel, which I really hope you are, I hope we're making a difference for you. You know, yesterday, we were very specific yesterday that we said when we do our game planning, we run through a whole gauntlet of different ways of hitting order flow. But the way we talk about it is you want to do an order flow assessment in OFA and basically run it through a gauntlet and hitting order flow from different angles. The problem that a lot of good, smart stock traders make is they only look at price. They only look at moving averages or, whatever it happens to be. And this isn't really a conversation about how you choose which stocks you're going to buy. This is more bringing it back to what Jerome Powell said yesterday and how that affected. Did it stop a stock market crash? I don't think so. I think that we're not out of the woods yet. I think there's still plenty of opportunity. But here's the thing I want to talk about. Yesterday, it was very clear that financial stocks, while still not quite out of the woods yet, they should have, or a lot of people believe that they should have rallied over the last several weeks, maybe even the last month, because they keep talking about raising interest rates and that increases their margin. Yesterday, I told you, and you want to write this down, that part of the scans you need to run have to include volume. So again, volume is order flow, tape reading. You put those two together and you can pay attention to what the smart money's doing when you learn how to put those pieces together. So yesterday, 7:30 in the morning, we mentioned that we saw kind of like if you're a Star Wars fan, there's a disturbance in the tape, a disturbance in the force. And we noticed that despite a big, large move to the downside in a lot of financial stocks, there was massive volume as well. And we said, we're pretty sure that the down move stopped and we're looking for them to start rallying. So it was yesterday's video, which was March 2nd, 2022. So I want to point out what that looks like on the daily charts. And then I'll show you this book because I think it's a really good one for you to pick up. Okay. So what we noticed on the daily charts was obviously heading into yesterday, that's what we were looking at, right? We said, okay, it's still to the downside. You can make a case that it's a push down and a pause, a push down and a pause, a big move down last week, and then another push down, right? So you got bearish gap, and what we call here a bullish U-turn. But the big thing that changed was this, and we pointed this out yesterday. Look at that volume, 3 out of the last 4 days, but 4 out of the last 4 days increased over the norm of what it would do. So yesterday's live stream, we came on and we said the tape changed. And these are the kind of things that you need to notice. Sometimes we call that accumulation if it happens over time. Sometimes we call that exhaustion if it happens after a big move to the upside or the downside. This one happened to be a bearish move with a big spike in volume. But the thing that a lot of people misinterpreted yesterday, and I got some really nice feedback, thank you for that, by the way, is it's after a significant move. It's not just one candle, it's after a significant move. Plus, we had the specter of which we mentioned yesterday, which was the Fed coming out in 2 weeks now. And has it been priced in? Because we had the same thing about a week and a half ago when people, last week, I'm sorry, when the Russian invasion happened, everybody's like, how is it going up? They just started a war. Why is the stock going up? And what people didn't factor in is the fact that we've been going down since January, since the very start of January. So all of this news was already factored in. They call it priced in. So you need to pay attention to whether it's an earnings report, which we'll talk about Best Buy's earnings report in a second, or any other significant catalyst. The first thing that a good trader, somebody who's really who wants to understand tape reading, which is you putting order flow and tape reading together to combine with as close as you can to the optimal entry, you need to consider volume and you need to consider the price action before that news catalyst came out. So if we shift back over, and I'll finish up on Citigroup and then we'll go back to the market. So that's what we said yesterday. And here's what ended up happening in Citigroup yesterday with another explosion in volume. So I just want to say this because look, I'm not shy. We put those pieces together and I taught you that yesterday. And I get excited about that because I want you to learn that it's so much more than just running a scan or saying it's above or below the moving average. We get a ton of people that come into the boot camp and the first thing they say is, wow, there's a lot of information in here. And it feels like sometimes it can be, more than you expected. And that's very intentional because I want you to have a high level understanding that once you understand what to look at in the markets, then the results are up to you. It's not whether or not the market is doing something or Jerome Powell and the Fed chair are doing something. It's a question of you understanding, I know what I'm looking for, and now it's just a question of whether it's unfolding on the market. So when we zoom on over into the what happened last week with the invasion, everybody was focused on this one day. And they're like, oh my gosh, I don't understand. There's a war just started. How are stocks going up? It's the price action that happened for the 7 weeks before that was factoring in this happening. That's the part of tape reading that you really want to think about and elevate yourself. So before you put on a trade ahead of earnings, before you put on a trade when some significant news comes out, anything, just take a quick look and say, what happened to price or what was price doing prior to that happening? You're talking about literally the start of January was the top and all-time highs, and we've been going down since then. So just one little extra look to the left and understanding that you have to put yourself into the trade and say, okay, if I was big money, what would I be doing heading into that news and how would I be reacting after it based on that news? So we're going to kind of circle this back to Jerome Powell and the interest rate conversation. What he said yesterday was we're going to stick with 25%. And if you remember, again, we talked about yesterday was we already knew that. We said that yesterday morning. We said that there was something like a 97% chance plus that it went from half a basis point down to 0.25 because of what happened between, what is happening between Russia and the Ukraine. And obviously our prayers are going out to everybody who's over there. So what we keep doing here is I want to keep inspiring you to be like, if I just know just a little bit more, it'll keep stacking my conviction in the ideas that when you choose to take risk, you feel really confident that you're making a good decision. So the interest rate conversation, this is a book that I bought recently. You can take a screenshot of it so you can take it. It's called The Lords of Easy Money. And the title's pretty aggressive there. How the Federal Reserve broke the American economy. It's not a big book. It's not a long book. But the first, let's say, 50 to 100 pages does an amazing job. And it goes back through a couple of decades, mostly starting with the inflation that happened in the 1980s, because that's really what we're comparing everything right now to the 70s and 80s. And the fact that we're now hitting 40-year highs in inflation, which is causing the Federal Reserve to consider raising interest rates because that's getting out of hand. You get other people on the other side of the tape saying, no, it's not really inflation. It's supply chain issues. That's why prices are going up. I don't know. I tend to think that it is actually inflation right now. I know there's a lot of smart people out there that have differing opinions, which is actually something else we're going to talk about. So anyway, this does a really good job. I'm sure you've heard the talk dovish or hawkish and maybe not understood what that meant, maybe not understand how the Fed's main lever to prevent a stock market crash is actually by adjusting interest rates up or down. So when the market is super hot, they want to cool it off because they want to keep things, kind of where they're supposed to be in their minds. When the market's crashing, the stock market crash and goes down, they try to stimulate growth in the economy by lowering interest rates and getting everything going again by giving better deals, I guess is the only way to say it. So companies borrow that money, put it back into the market and stimulates the economy. So anyway, what he announced yesterday was already priced in. So that's why I said it wasn't really new news. No. So in my opinion, based on reading the charts, reading the order flow, reading the tape, doing basic technical analysis, we're still in a bigger move to the downside. So if you want to educate yourself a little bit, hop on your Amazon and get this. Ironically, whenever I travel a little bit, I get like look at the books the thing that I have in there. That's actually not intentional. I just realized I did that, but I have a Titanic bookmark. Is that foreshadowing? I don't know, but that's pretty funny, and that wasn't planned. So my point is, I don't think that what they announced yesterday changed anything. I think that we're still in this bearish type of market where until this changes, my opinion is not going to change. Now, from an active trading perspective, it's been awesome. I just want to make that clear. If you understand order flow, if you understand reading the tape, these changes and these conversations around interest rates with the VIX spiking higher, volatility increasing, there's a lot of opportunity if you could make fast decisions, if you could make decisions with conviction, if you can set the right profit targets and have the right share size for the volatility that's unfolding right now. If you don't have a strategy and you're not sure what you're doing, you're probably feeling like you're getting your head beat in right now because it's whipsawing you back and forth. And I feel your pain because I went through that way back when I started. And actually, in just a month, I've been trading for 22 years. So we're probably going to have some kind of celebration on here at some point. Actually, Franz brings something up here good too as well. John, I want to talk about that. Inflation in the 80s, yes. If for those of us old enough to remember the lines at the gas stations, right? Inflation reached 14%. I'll give you one better than that. When I first got into the industry, when I was 20 years old, I was selling mutual funds essentially back then. And it was I don't even remember what the exact one was, but I remember walking into somebody's house and this woman had a clip from the bank down the block. And I am not kidding you about this because I remember it like it was yesterday. 18.5% interest on a 1-year CD. And they were going to give her a grandfather clock. That's what it was like with interest rates in the 80s. And I want to say that was probably like mid 80s, 85, 86 at some point like that. Now you're lucky you put your CD in the bank for 2 years and you get 2%. That's the effect of what the Fed did with keeping those interest rates all the way down, stimulating us after the housing crisis after the financial crisis, quantitative easing, keeping those rates down. That book is really good. If you happen to miss it, just kind of scoot back and watch that. Okay. Something else I want to talk about. I want to walk our way over into sector rotation, but I'm gonna finish up today giving you the process of what I look at, because a lot of people ask about, like, what do you do? Like, how do you start your day? Like I said, as soon as I pour my coffee and sit down, what are the first things I do? So we're going to work our way back over to sector rotation. We're going to get Jerome Powell off the screen now and over here. So you can actually see the progression of where we were coming into Monday. Friday was really good. A couple of stocks had a pretty good week. Worked our way into Tuesday, but we started to creep into where some heavier selling over the week came in, and you see that over here. But then yesterday we kind of lit it up a little bit. All right, so this is Tuesday going into Wednesday, a little bit of a mixed bag, and we saw that on the chart. So this is going into Wednesday, and we saw that. All right, that's how it ended up unfolding over here. But then yesterday, look at this picture yesterday based on what Powell did, and now we dive a little bit deeper into those sectors. So what we're actually going to focus on, we know that energy and a lot of these stocks, and specifically Chevron, have pretty much just been off to the races. So if you didn't happen to catch on Monday, I believe it was Monday, Chevron announced a buyback that was already strong with the global situation that's going on between inflation and what's going on in Russia and whatnot. So they were kind of like a no-brainer. It was just a question of how much does it normally move, and can you get it near that optimal entry as best as you can. We mentioned yesterday that we still like it, but we would not be initiating a new swing trade long because we've gone too far past the optimal entry. We want to get a better entry on that. And they're actually up a little bit again this morning. So we said maybe a 1 or 2 day trade through there. Let's see. We got a couple of good comments here. Let's see. Scott saying, I remember getting 16%. Yeah, crazy, right? Amazing. Let's see. Jay, my first savings account earned 8%. When was that? That's actually pretty good, right? I think a lot of people would sign up for that right now. All I heard from Powell was we're willing to risk in order to keep pumping this market. Yeah, Pedro, that's actually my point. Like, he didn't really say anything that we didn't know already, but the market reacted so strongly to it. It was a little bit shocking, quite honestly, which actually takes us into the next thing, talking about inflation, which stocks should be going up with the conversation about interest rates going up, which stocks should not be going up. You wouldn't expect them to be going up with interest rates going up. So obviously financial stocks, which we just mentioned, should be going up. Should be. I still have to read the tape in the order flow. And technology stocks generally do not go up as interest rates go up. So we're going to take a look at those as well. But what's kind of cool is we could just work our way over into the research that we do every day. And we're going to look here, technology and financials actually at the bottom. But we all know that what they did yesterday was pretty darn strong and had a pretty good move back to the upside. So we're actually going to focus on, well, first we have Best Buy came out this morning and not exactly awesome. So if we take a look at that real quick, nice 5-day rally into it and actually right at this breakout level. So this is actually the level that we've been watching in the stock. And right now it's a 105 and change. Oh, actually, that's something I want to point out. So remember, I keep coming back, like my mind's all over the place right now. We had Target a couple of years. Let me reset. Target a couple of days ago had that big announcement where they finally went through 100 billion in sales and had that big gap up. And we said, not yet. Here's the level. Then yesterday we had a couple of stocks. Specifically, we talked about some retail stocks yesterday to start focusing on. And Nordstrom had a big move yesterday. So I want to read the tape with you on those two different ideas and how we were trading them this week and how you could set up some, I guess you would say, easier ideas for yourself. Target did not follow through the first day, came back a little bit yesterday and is near the entry we discussed. JWN Nordstrom held that giant gap yesterday and was a very tradable opportunity and a short-term opportunity to buy the stock, and it stayed at that level. So both from a day trading and swing trading perspective. So the point is, I'm going to show you both of those levels where Target did not give us the entry yet, but is close. Nordstrom did and turned into a pretty nice stock that followed through yesterday. So I want to walk you through both of those right now. And the reason I'm saying that is we're tying that back to what Best Buy did with the earnings today, which you can see here. Miss expectations due to supply chain challenges and Omicron. Now, you might be saying to yourself, why is it going up if that's the case? And very good reason. We're not buying what happened last quarter. We're buying today for what we're expecting to happen with their future cash flows. So obviously what they said about guidance and things going forward, the market is interpreting that in a positive way. And that's why they missed, but is still going higher. A lot of people have that question. So we're looking at the discounted cash flows of what they are in the moment right now based on the stock price, not what they did during the holiday season. So that's why Best Buy is up. So we're going to bring these three stocks together: Best Buy, Nordstrom's, and remember yesterday we gave you a big list. We said watch these retail stocks because we're noticing the change in the tape, and they might not be the sexiest stocks, but let's all say it together: a slow dollar is still a dollar. And Nordstrom gave some opportunity yesterday, and Target getting up there. Maybe Best Buy, same thing today, right? So Best Buy, that's the level we're watching. But let's take a look at Target because this is actually the one that we were looking at. Here's the price on the big gap up. There's the volume after earnings. And we said it's got to be above that in order for us to consider it. So yesterday, it kind of clawed its way back. And if we zoom this out on the hourly chart, you can see it a little better. Got back, but not quite there, right? So now we know that the line in the sand that we're looking for here is the opening price, which is 226.83. So essentially what I'd be looking for and game planning today in Target is if it's 226.83 is the price that matters to me right now by reading the tape, I'm going to set an alert for 227. I don't want it exactly at that level. I want to know it gets just above there. Now, here's an advanced thing. You could set an alert at that level, but maybe you have a full-time job. I know Michael has a business, actually, if I'm not mistaken correctly, Mike. You have a business and sometimes you can't be in front of your computer all the time. So you can set an alert at that price, which we said now target TGT at 227. But kind of an advanced way of doing it is you actually set a buy stop at that price. So I'm just going to walk you through how to do that because it's actually kind of cool to do. So let's just say, for argument's sake, you know that you want to get 1,000 shares. So let's say 1,000 shares, right? And let me actually make this a little bit bigger because I want to make sure that you can see it. Okay, so what we're about to talk about, this is a very advanced strategy that I used in my prop trading firm. So there's setting alerts, and then there's getting a stock into your position summary. So somebody just asked, is the tape volume? It's one part of it. And that's actually a challenge that a lot of people have, is they think it's just this one thing, or it's just that one thing. That's not the case. It's putting those pieces together. It's volume. It's price action. It's how it closed yesterday. It's how the group traded. How did the market trade? How is the sector traded? You put all those together and you make your analysis. That's what we call it, order flow assessment, putting all those pieces together. Okay. So I want to get over here and I want to break it down. So the point I was making was I taught in my firm that you want the stock in your open positions as what we called a tier one or a feeler position. Jesse Livermore called it his first probe to get feedback from the market. So you're getting in and getting feedback from the market. You're essentially paying the stock market for data, basically by allocating buying pressure and say, okay, tell me how strong or weak that stock is at the level that matters to me. So let's say we want to get to 1,000 shares, but under the context of what I just said. Okay. So you'd actually put out, you want 1,000 shares, and the price that we're watching for is 226.83, but we're going to say 227, right? So what I would do is I would place a buy stop limit order at 227 for 100 shares. Now I want to be clear. That's not my final position. That's just me. Okay, got to the level that I want. Now I need the stock to prove to me it's going to stay above that level, and then I'll look to build my position. So I'm going to know that stock better than anybody on Wall Street because I bought the stock, only 100 shares, but it's going up, it's going down, it's going up, it's going down, and I'm watching it. So let's say maybe it was break even, then I was up 50 cents and it pulled back and I was up 25 cents. And now I'm up 60 cents. So immediately, without even looking at the chart, because I know my P&L on the stock, I'm noticing that it held the bid. So it pushed up and held the bid. Or in the other direction, I was even, went down a little further. So I'm like, okay, I don't want any more shares until it actually validates my idea. So if it validates my idea because I have it in my position summary, then I'm going to look to start to build a position in that direction. So up to that level is where I'm going to put on that first 100 shares. That's the actual trade scenario. Now, the question that comes back is, how do you manage risk? Well, I know how much dollar amount I'm willing to risk on every trade because I never go into a trade saying I'm just going to put on shares and I'll let risk take care of itself. That's not the way it works. You first pick the dollar amount you're willing to risk. Then based on volatility, you go and get the right share size to allow that stock to fluctuate. So just to give you some, like a really basic way of doing that, if you're willing to risk $500 on a trade and you're willing to risk $1 for the stop loss, well, that's 500 shares, right? It's just simple math, right? So you're allowing it to fluctuate based on what you think the stock needs to move in order to not get stopped out and give the stock a chance to move. But what if you want to risk that same $500 on a $2 stop loss? Well, you're doubling the stop loss, which means that you need to cut the shares in half to risk that same $500. So you see the increase in volatility, you're not risking more. You're risking the same $500. You're just risking it with less shares to allow the stock to fluctuate. That is one of the biggest secrets hiding in plain sight to trade successfully, because people think that, well, I'm just going to trade the same share size all the time, regardless of the stock, because if this thing moves, I'm going to make $2,000 or whatever it happens to be. But you're getting shaken out of too many good ideas because you didn't have the right position size. So I know the dollar amount I'm willing to risk, and obviously I'm not going to come close to that on the 100 shares. It's when I start to build up to my full position, that's when my stop loss kicks in, assuming it moves in my favor, and then we put that in at the spot that we want it to. So the next thing I want to walk through today is we want to get into the strategy, because a lot of people ask me, what do I do during the day as the market unfolds? Actually, first, I want to go into those other two stocks. So Target was the one, JWN was the other one, and you can see what this stock did from the open yesterday. Not necessarily a monster move, but you know what? That's still pretty good. I mean, we came up at that price before the market opened, and we're talking about 25 up to 27 and a half. Look, man, we talked about that stock 2 hours before the market opened. We gave you the exact price, $2.50 after the market opened. That doesn't stink. That doesn't stink at all. So if we work our way over to Best Buy and do that same kind of thing today, that's actually what we're looking for, because actually on the daily chart of Best Buy, you can see over here, it's up at 107 at this point. So we've actually gone even higher. We're like right up in that area over there, 106. And ironically, look at that, right at that breakout level. So that's how we'd be managing. Now, I want to walk you through some of the ideas. I want you to snapshot this because this is the sector rotation one, which is kind of important, okay? Because you want to have a list of ideas that match today's criteria. Now, I want to be clear. These are the stocks that meet the criteria. Only you can decide what time frame they're good for you, whether they're a day trade, a swing trade, a position trade. But I thought it was kind of cool to give you the ideas of stocks that when I do the research and give it to the community, these are the ideas that we put into the rotation. These are the ideas that we go a little deeper in and look at the sectors, then look at the industry groups and try and find which stocks to buy at the optimal entry price. So when we talk about that, and if you remember yesterday, we said going into Monday, the list was 59 stocks. Then going into Tuesday, the list went down to 29 stocks. Going into Wednesday, the list went down to 20 stocks. So it decreased each day this week, Monday, Tuesday, and Wednesday. Then Jerome Powell made the announcement yesterday, and a lot of stocks lit up. So we went from 20 up to this list of stocks right now. So again, this is the sector rotation, and this is the list of stocks, which just expanded dramatically. So the list of stocks actually doubled overnight and became this yesterday. So a lot of stuff became super interesting yesterday. So what does that mean from a short-term perspective? Well, for myself right now, the biggest thing I'm looking for is, do we get follow through in the financial stocks off of yesterday? Some of the semiconductor stocks caught a really strong bid yesterday as well. A lot of the financial stocks that we're looking at are still in bearish order flows. Some of them are sitting at breakout levels. But remember what we talked about yesterday. You need to do your game planning. You need to do your scanning and find those ideas based on price action and volume and the market and the sector and the group. Build your argument for the trade, and then you trade your own ideas. And this is what I'm really hoping to teach everybody is I want to show you how to put all this together for yourself so you have absolute conviction. And we mentioned it yesterday. You want to wake up every day expecting to make money. Will you make money every day? No, that's silly. No, you won't. I have losing days. I have losing trades, but I expect to make money every day because I know how to put these pieces together. So I want to walk you through something that we got asked yesterday, which is what is the process of what I go through during the day. So essentially, I do my scans, my initial scans at 7 p.m. each night. Okay, that's the first thing. Then the next morning, I wake up at 5 a.m. and that's the very first thing that I do. So I always want to make sure I give myself at night before I do at least an hour to 90 minutes of game planning. So again, it starts with the stock market power pyramid. I start with the market and do an assessment of give me an idea of the order flow in the market right now. And that means the Dow, the S&P 500, and the NASDAQ. Then I work my way up and I go to the sectors, which is what I just showed you. Then from the sectors, I do a deeper dive into which industry groups in the sectors are trading well within the context of order flow. So once I come up with an assessment on the market, then I put the right stocks and the right sectors in sync with the market, because those are the A+ trades that have the highest chance of moving in the direction you would expect. So market, sectors, find the industry groups that are trading strong with the market, and then find the stocks within that. I don't trade penny stocks. I don't trade OTC stocks. I trade the market leaders, the stocks you probably heard of. So that's just my nightly process. That's my 7 p.m. process. So the next morning at 5 a.m., I review my game plan from the night before, and I look to see is there anything that I might have missed. So I do a quick run through all of my scans. Then, and this is actually kind of the fun part that a lot of people ask is like, what do you read? What do you read at night? What do you read in the morning? And that kind of stuff. And actually we had a good conversation. I wonder what everybody here does. We had a really good conversation yesterday. Do you watch news while you're trading? And I'm not talking about do you have a news service? Do you watch CNBC or Bloomberg or any of those kind of things? If everybody could just type in, I'd be curious because I actually don't. I find that I lose focus when I'm watching what's going on or if something gets announced. I want to trade my ideas that I went through the whole game plan. And I'm curious whether or not everybody actually pays attention to when CNBC or Bloomberg announces something quickly. For me personally, I find that I don't want to know that. I mean, of course, I pay attention to the news and I'll see it in price action, but I don't want to listen. For me personally, we had a big conversation about this yesterday. Some people love it, some people don't. I actually don't. Okay, so I review the game plan at 5 a.m. Then I go to Stock Twits, which is my first idea. So Stock Twits is essentially similar to Twitter. I can't say it any other way, but just stock trading ideas. Now, I'm not going there for ideas. I want to be clear about that. I want my ideas. I'm just going there to get a feel for what's going on in the market. Are there any stocks that are exploding? Any stocks that are up or down big for the day? Is there anything that a lot of people are talking about? And can I add that to my game plan? Okay. Next, I work my way over to CNBC and I just get, CNBC.com, and I get a little bit of a feel for what's going on in the market. Again, and I can't stress this strongly enough. I'm not looking for somebody to tell me what to do. I'm just going there to get a feel for what's going on in the market and see if it validates my game plan. And I just want to see, okay, I'm on the right track. Everything I'm looking at is cool. The sectors I pick, my read of the market is good. And then I make my way a little bit deeper. So after CNBC, those are the general ideas. Then I go to Benzinga. We have Benzinga Pro in our community. And I get a feel for what's going on from earnings and the calendar and all of those kind of things. Then I go to the Wall Street Journal. And I do a bunch of reading over there. Then I go to Barron's. And I do a bunch of there, and then I go to IBD. But what I want to get across here, and then I log into TradeStation, and I upload my game plan. Okay, and that's essentially my process from start to finish. But I want to be very clear about this. All of that stuff that I just talked about, I'm not saying you have to be like me. And a lot of people, I'm well known for like how hard I work, and I'm not saying you have to be like me, but here's what I want to ask yourself: what kind of results you're getting and what kind of effort you're putting into it. This is why I said a couple of minutes ago before, like all the people that come into the boot camp, for the most part, they're like, wow, this is a lot of stuff. Yeah, because I want you to realize that if you want that unlimited upside that comes with the market, I want to train you and make you think like a professional trader. So I just showed you what I do. And I said I get up at 5 o'clock in the morning. So if it's 90 minutes at night and another 90 minutes in the morning, that's 3 hours I'm putting into deciding which stocks I want to trade, which stocks I want to buy or sell, and what is my bias for the stock market that day. 3 hours before I hit a buy or sell key. I'm not saying you need to be like me, but I am saying, what kind of results are you getting based on the current process that you have? And do you wake up every day saying, I did my work and I expect to make money? Now it's just a question of follow through. Now, again, I don't make money every day. I don't make money on every trade, but quite frankly, I don't have to. As long as you keep your losses small and learn how to use the profit maximizer, which again, that's something we teach in the boot camp, you'll understand how to make some bigger winners, and that losses really, they're just a business expense to run your trading business. So I want to challenge you right now. I know Allison was in our community and whatnot. A bunch of people here were actually, thank you. The point that I want to get across is here, maybe you're obsessed like I am and you don't mind putting in a little bit of extra work. All I'm asking you right now is to look in the mirror. And again, I'm throwing it back on you for results. If you're not getting the results that you're getting, ask yourself, what can you change? What can you add? What don't you know yet that is not helping? Like it's like one of those things that you ask, like, what did I not ask? You have to start asking yourself, what am I missing? What am I not understanding? Which part of trading do I not get? Which part of trading, if I understood, will elevate my results and start to see that consistency? So I hope I'm challenging you right now, because look, there's so much opportunity right now. As long as you understand how to go at it, as long as you understand order flow, tape reading, reversing risk, put those pieces together and then come up with the idea of which stocks match your game plan. Okay. So today we're adding into the game plan right now, we're adding technology stocks, specifically semiconductor stocks, which were pretty strong yesterday. Some of them are at breakout levels. Some of them are looking to break down. Micron is actually one of the ones which actually has news coming up. So keep an eye on those as well. Financial stocks are going to be part of the big process of what we're going to be watching today specifically. Was yesterday's big reversal candlestick the start of a new move? Was it short covering or was it new buying? That's the big thing that we're going to take a look at actually today. All right, let's see if we got what gives you the most conviction for indices, direction? Lewis, we teach that stuff in the boot camp. There's certain stuff that I have to leave behind the curtain. I hope I'm giving enough good, valuable information, but if you want to learn a little bit more about the boot camp, click the link in the description where it says learn how to trade stocks. I'd love to work with you. Everything that we do in the boot camp is personalized. And I know there's a bunch of people in here right now that are in the boot camp that can confirm that. I can guarantee you something, that you will get personalized help in the boot camp from me personally. I'm doing all the coaching because I challenge you to ask questions. As a matter of fact, and John Bates is here, he can validate this for me. I go at people in the boot camp in a way that I say, John, you haven't asked a question in a week, but I see in Discord that that's frustrating you, and that's what's bothering you. Ask me a question so I can help you. What part of looking at the market is not clicking for you? So will you get personalized help from me? Yes. Will I give you personalized help on YouTube? No. People that invest in themselves are going to get more of my time. It's just not going to be, come on. That's just, that's just the way it is. Anyway, so we got a couple of people here that are in the boot camp. Scott Henderson, thank you so much. Joseph O'Brien, look, you guys see how hard I work. Men and women, guys and girls, you see how hard I work here. I'm not selling you on anything. I'm just asking you to ask yourself, do you think something is missing? Do you think something is missing, and where are you going to get that answer from? And hopefully I'm inspiring you here to want to learn more because there's opportunity. All right. I have to head out, everybody. I have to hop on over and get ready for our boot camp game plan call, which starts in a little bit. So here's the book I mentioned this morning. It's actually pretty good. The Lords of Easy Money. If you find these videos helpful, please do me a favor. Smash that subscribe button. Hit the thumbs up button. I would really appreciate it. I would really appreciate it. Have an awesome day today, everybody. Be profitable today. Take care now.